So the reason I wanted to do this today is because I can't tell you how many phone calls I've been getting from people going, "Hey, my payment's gone up, Jeff. I thought you gave me a fixed rate." And Zach and I were in a BNI group together for a while, and I'm like, "Man, it couldn't be the rate. So your payment didn't change. So let's look at it." And what we're seeing is homeowners insurance has gone through the roof, right? And we've talked about this like over the past. You guys know better than me. Over the past few years, insurance premiums have gone up. And so oftentimes I'll tell them call your agent and review your policy to make sure that you're not overpaying on your insurance. And and so that's where they're at, right? So that's why I wanted to have this call today. And then for us as loan officers, as professionals, as financial advisors, as real estate agents, we're always looking for a reason to call our clients. And other than like I've heard people go, "Well, I call my customers that have an A beginning their last name beginning with an A on the first day of the month. I call my customers that have a B on the second day of the month." And when you're calling like that, they know they'll look and go, "Oh, it's the second." They're calling because they want business. For me, it's like I want to help. When I make a phone call, I want it to be for a reason. Like, "Hey, we can drop your rate and save you payment," or "Hey, have you checked your homeowner's insurance lately or your car insurance?" Because I know when you guys bundle this stuff, it ends up being hundreds, if not thousands of dollars that they save. And for me personally, when I was in my 20s, I had my buddy from high school as my insurance agent. I was paying $250 a month for insurance with minimum coverage. And then, fast forward 4 or 5 years later, I meet somebody else who's an insurance agent. He reviews it and goes, "Hey, I can give you full coverage for $80 a month." Right. And then I call my buddy I went to high school with. I'm like, "My man, like, why didn't you review my stuff?" And he's like, "Oh, I don't know. I was just busy doing other things." So it happens. It's hard when you have a big book of business to go through and review everybody. I'm not saying that you guys don't do that, but customers need to be proactive with it. And I wanted you guys to talk today about why have insurance rates gone up, and then what can they do about it. So I know Zach and Ryan, you guys collaborate on this, which I love because that's such a abundance mentality. And that's what I do. Like I get with other loan officers, I get with other people in the industry, and just collaborate on how we can help everybody. And Jimmy Stevenson, he's a buddy of mine I grew up with. He's also an insurance agent. So, Zach, are you leading the presentation here?
Yeah, I mean, Ryan and I talked about kind of
Okay.
opening it up to the floor and seeing like what are your pain points? What are you guys hearing, seeing? What's gotten you stuck on a deal? The obvious one out there that I think we've all seen is just, hey, due to inflation, a lot of carriers are taking rate and rates are going up faster than they have, in the last 30, 40 years.
Yep.
So, that's a tough pill for consumers to swallow, but it is what it is. So how do you manage that along with, for real estate's sake, getting to closing, getting through the mortgage process, getting that DTI to look right for you guys and everybody's happy. So we were more so going to open it up to the floor and say, what questions do you guys have? But I know that's going to be the main point of reference here is what's going on with rates, where are they going from here? And if you use a little bit of that, like one of the articles I read, I was actually trying to look it up because I'll try to share it after, but a couple of the reinsurance markets, so where like a Travelers, Progressive, Erie, all the brands you've heard of, Allstate, where they go to buy insurance and their rates, a couple of those reinsurers, there's only, a few that main players that actually matter in the world. A handful of them are saying that they're going to distribute, close to flat renewals for the insurance companies, which is a good trickle down for the consumer saying, all right, this thing's finally maybe cooling off a little bit. Ryan, I don't know if you're seeing that like on your renewals. We're starting to see a little bit of a cool off on the premium side of things and the increases year to year.
Yeah, so what I've noticed is in the last 3 months, I've seen more renewals either decrease or stay the same than I have since 2020. I think a leading factor, and it kind of started with COVID, is the price of materials to build a house skyrocketed. The
Mm.
price of lumber, the price of wood, everything skyrocketed when it came to construction and whatnot. And that caused your replacement cost values to just go through the roof. And so you might buy a house for 150 grand or 250 grand. That's the market value, the reconstruction cost on what the insurance company's insuring it for to rebuild it. went through the roof because the price of material and labor went through the roof. And then it's just been an after effect, like Zach said, following inflation at that point. So it never really cooled off until the last 3 or 4 months. So it's kind of just been uh, us in the industry are calling it kind of like the perfect storm and the hardest market in insurance that we've seen. Um, and it's rates have just been increasing. In 2023, my average rate increase was 15% across all of my clients.
That's crazy. Does anybody in the room have a question about insurance or something you've seen for your clients recently? I know for us, when we have people calling us about insurance rates, I'm like, Ryan, they've been more than 15% increases.
Oh yeah.
Yeah.
That was my average.
Yeah. Yeah. And it's like, what do we do to combat that? So what can you guys do to help with that? Like, can you help with that, or are they just stuck with that higher premium?
So in my experience over the last 2 or 3 years, it's been really hard to beat that because if one carrier is taking rate, then most of the competitors and ones I can shop it with have also taken rate. If I did my job right the first time, then I'm not going to be able to beat that rate. Sometimes, I could switch carriers. Now that the market's cooling off, I'm seeing things open up and more carriers that are offering more competitive rates. Um, Me personally, in my agency, I had an automated system set up within my agency. When policies would renew, it would automatically calculate the percentage of increase. If it was less than 10%, I would leave it alone unless the client reached out. Anything 10% or more, it would automatically flag it, send me alert, and me would get to work to try to reshop it. Which for a period, everything was over basically that 10% mark. So I was reshopping homeowners and probably a third of the time I wasn't able to switch them. They had the best rate, and 2/3 of the time I would end up switching them at renewal.
Okay. I love that. We
Jeff, can
have
I
something.
ask a question?
Yeah, please do. Yep.
So I'm unfamiliar with the gentleman that's speaking, and I'm also I just moved back from Dubai. I lived there for last year and a half. I don't know if you know that. And I am looking to do a complete and comprehensive review of all my insurance now. I have homeowners, I have multiple car policies, I have multiple buildings, commercial, residential. I have quite a large insurance footprint, right? And I'm looking to do a comprehensive review of it to try to control my costs and also get an understanding of where I am and what I need. Now, I also have commercial umbrella policies, so my limits need to be in line with what my commercial umbrella requires and things along those lines. So I have a large um, insurance need, and I want to sit down with somebody that knows the industry very well and will help me, basically get a handle on this. I have insurance for Erie. I have all these different insurance companies right now because once you reach a certain number of units, Erie won't insure the other units. So I have other insurance companies, and it's just to be perfectly frank, I believe that it's a shit show. And since I've been gone, I haven't really been focused on it. But now that I'm back, I wanna focus on it.
Yeah,
So,
that's good.
do you
And
do insurance, Jeff?
I do
What
not.
what what was his business again?
Dave's got multiple businesses.
Oh,
That's what he was saying. He's got a lot of needs for insurance, and he needs an overall comprehensive evaluation of what can be done.
Like I have commercial buildings. I have
Yeah.
commercial umbrella policies. I have businesses. I own a lending institution. I own a car restoration company, which is basically a shell company. I have multiple residential uh, rental, non-owner occupied rental properties. I have my own personal home. I have a collection of antique cars. I mean, you name it. I have a large insurance footprint.
But
Yeah.
I think that Zach and I we're both brokers, and what that allows either of us to do. We both own our own agency in the Pittsburgh area. Being a broker, we can shop, the rate across everything, whether it's your car restoration, whether it's your antique cars. We have multiple carriers for all of those things. I know either of us would be happy to sit down with you, do a full consultation, see where your risks are at, how to properly protect them, and put, a full package together. Just based on the different industries that you have, you're going to have different carriers and, different policies for all of the different things you have going on. It's not going to be a, one carrier fits all, and that, wouldn't be a good recommendation on.
Well, I don't expect that to be the
Yep.
case. I understand that, right? But like I said, I haven't paid attention to it as much as I should have because I was living abroad. And now that I'm back here, I want to actually do a comprehensive review to make sure that I'm as efficient as possible.
Yeah. Hey, Dave, I work for a large broker here in Pittsburgh as well, too, just like Zach and Ryan and all that. And I'm sure between all of us, we could probably offer you something great. I actually specialize in the commercial side. That's all I live and breathe every day. I'm at USI Insurance here in Pittsburgh and downtown Pittsburgh. So yeah, I mean, any of us could definitely help you with all that.
I think I actually have a USI policy somewhere along the lines. That sounds familiar.
And
I don't think I'm all that thrilled with their rates or the situation, though, to be frank, right?
Yeah. That's good stuff, man. And we all need to be doing this for ourselves, but also our clients, right? And so, Ryan, I wanted to show you something like what you said. You have an automatic trigger that fires out when somebody's like over 10%. And every agent on this call, every realtor on this call, you can use this tool as well. And it's free for you guys up to your first 200 people that you log on there. Paula, can I get a share? So, Ryan, we send this out monthly. Let me give you this. And this is the property I used to live in. So if you see every month this thing goes out. In our numbers, if you look at it, we send out 4,900 reports every month, and over 75% of them open it every single month because of the information that's in it. So for realtors on this call, like if you look at it, there were 3,600 opened or sent. There were 2,100. It was 58% this past month. It's usually over 70%. But that's still an incredible open rate. And the reason why is that it shows you, hey, what is the equity that you have in a property right now? What is your home worth? So it keeps them off of Zillow, keeps them off the internet. So it kind of like geofences your clients from getting nabbed by another lender, by another real estate agent. And then it says, look, if you sold your home, how much would you make? If you did a cash out refi, if you needed a line of credit. And then it also, this is the part I love the most. It says now for me, I got 3.125 on this house. So if I did a 30-year, I would lose $87,000. If I did a 15-year, I would lose 16 grand, right? But it shows them what they can save, what the current rates are versus what market rates are. And I can tell you yesterday or this morning, I probably got a dozen emails from past clients going, does it make sense for me to refinance? How do I get into the investment market? How do I buy rentals? Can I get a line of credit? What's the value of my house? Is it accurate? So we know conversations lead to business, right? And so, Ryan, when I get these, I immediately text the client and let them know, hey, I got your question. When do we have a minute to talk? Right? So that we can stand out in front of them. So for all the realtors on this call, if you want to get signed up with Home IQ, it's here for you. Right? And like I said, it's free for the first 200 people that you upload in your past database. And they don't even have to be your past clients. They can be people that that own a home. You could turn it on for your friends and family as well, so that you're standing in front of them. They know what you do for a living. But one of the things I have during those phone calls is like, have you reviewed your insurance recently? Because that's another way to save money. And when you think about it, like, is it easier to go into your boss's office and ask for a pay raise? Or is it easier to call your insurance agent and to go, hey, can we save some money?
Zach,
Right?
what are you seeing, Zach, as like your biggest way to combat the rate increases on homeowners?
Yeah, we just dealt with this actually yesterday. It's kind of funny. It becomes the topic of conversation when you think it's not going to be the topic of conversation. So, Ryan, we talked last week about investors. I have a guy in Ohio that has like 8 houses. He was closing on another one yesterday, and he's talking to my home and auto person, and he's like, "Hey, can you check the rate on all my other houses while we're at it?" And she's like, "All right, well, let's actually bind the policy for the closing you're going to tomorrow, first things first, and then let's, check through your other policies." So we did take a quick look at it, and we, in our system, like you have, hey, we have our triggers. If it's over 10%, it's going to go into a system, and we can look at rates and things like that. For us, some of our carriers versus our top carriers, you got to be careful explaining to the customer on what forms are you getting, what coverages are you getting. It's not always apples to apples. Everyone wants to look at that dwelling coverage, deductible, contents, and liability. All right, well, I have $400,000 on my house, $500,000 in liability, and $1,000 deductible. That's the tip of the iceberg. Everything that's under the water is what's going to cause you problems. Maybe the roof's now on an ACV contract instead of replacement cost contract. Like there's so many ways recently in the last 5 years that carriers have stripped away coverages that you don't see and you don't pay attention to. So you got to be really careful about the grass is greener on the other side, because you're looking at those three basic line items and it's not, like I said, apples to apples. So we, same as you, we're going to sit down, we're going to shop it, we're going to take a look at it, see what options are out there. But we're going to make sure that you're very aware of the forms and, the lack of coverage maybe from one step to the other. Or we're going to help you make it like yesterday, the way we solved it. We had a customer that had guaranteed replacement costs and we lowered them down to extended replacement costs, and it saved them like $300 per property across 8 properties. And he was happy with that. He's like, all right, we'll keep the same policies. I'm good with going from guaranteed to extended. What that is, in short, guaranteed replacement costs, kind of like Ryan was saying, when you have a huge spike in cost of labor, cost of materials, your house is insured for $300,000. Let's say a tornado rips through your neighborhood. Well, there's going to be a huge inflationary spike to replace your home and everybody else's home around you, because now it's supply and demand, and there's little supply and a huge demand because this tornado ripped through. So your 300,000 might not get you what you need in that moment to rebuild your home. You might need 360, 370, even 400. Guaranteed replacement cost is going to pay to get the home replaced no matter what. Extended only gives you a 25% buffer, so it's not unlimited. So that small difference in the contract that we chose, kept all the coverages and deductibles the same, saved them like $300 a house. So that's one of the things we did there. One of the notes that I just wrote down in my experience working with realtors, and you guys can tell me if I'm wrong, maybe people don't have this problem, but it's process, it's timing, and understanding the property for your customer. Because as insurance agents, Jimmy, Ryan, we all can probably sit here and tell stories as long as the day of a realtor or mortgage person came to us, closings Friday, it's Wednesday, we need to get this done. Debt to income ratio needs to be here. So we need this much. We need 10 pounds of stuff packed in a 3-pound bag. And the insurance guy's got to be the one to get it done. So when you think about process, timing, and understanding your property for your customer, that's a big deal, because we have underwriters too. And underwriting has gotten so strict. And like I said, carriers have figured out every way they can to peel away a little bit of coverage here and there from their core policies compared to what they looked like in 2010, where they just gave you everything. So, think about that, be ahead of it, start getting quotes really early in the process, so that your insurance agent can work for you, and get out to market and do that quoting process as a broker and really make sure that we're getting the best options for you. So that process and timing and knowing the property, how old's the roof? Is there knob and tube wiring? Is there fuses? Is there circuit breakers? Like, what is the quality of the home? And you kind of have to put yourself in an insurance agent's shoes, because we can't just make stuff fly anymore. Those days are gone.
So
Zach, real quick, Zach, I love that you said that, right? So for Paula and I, early in the process, that's one of the first things we tell to customers, like, get on it, like call an insurance agent right now to get this started, because that's the thing where we get jammed up the most. But for the realtors on the call, you can throw it in a chat or unmute. Is this something that you talk to your buyers about early in the process? Like, do you tell them to get started on their homeowners insurance process early? And if not, to Zach's point, is that something that you guys can implement to make sure that they take care of
Is
it?
it
Because most
even
people, yeah,
is it even a seller conversation too? Like, hey guys, you've got some old wiring in the attic that's live, and you've got a 55-year-old roof. Like, you got to put, like, let's put a little cash in. I don't know that process enough, but even on
yeah,
the seller side, I would think, hey, you're going to have a much easier sales process if you guys invest a little money before you sell here.
So
Uh,
right,
can I add on to that?
yeah,
Yeah, so like, I've dealt, Jeff, with some of your guys' clients with, buying new homes and all that. And a lot of the things I saw and recommended for them to look out for, you got to check the sidewalks. If you're seeing any types of cracks or anything like that in the sidewalks, in the sides of the foundations, those stuff need to be addressed, because as soon as they send an underwriter, or, or not an underwriter, but they send an inspection person out there, they're going to flag that stuff right away. Just like, Zach was saying, they're getting strict on that end of stuff. And you got to make sure that stuff's in good condition. The roof's taken care of, just knowing all that stuff. So all those little
Yeah.
things like that.
I would
To that, Ryan and I talked last week about some carriers will do a pre-bind inspection and they will come out and inspect the property. Or even worse, Ryan and I talked about this, they'll do a post-bind inspection. So we get it all done, it's wrapped up, they paid their first month's premium or the escrow check's coming, and the carrier goes out and inspects it 3 weeks after we put insurance on it, and then they send out a notice of cancellation.
Right.
So
They'll also,
understanding your insurance policy, what
oh
inspections are
wow.
tied to it.
They also, when they do the post-bond inspection, so within 30 days of the policy being issued, they send the inspector out. Sometimes the inspector has a drone, goes up and looks at the roof and gutters. They will send you a notice of cancellation and say, hey, you have 60 days to repair these items. And it's a disaster. I also like that Jimmy and Zach, you both touched on roof. So two things I've seen. One, any roof year, shingle specifically, over 20 years old, it's almost impossible to find coverage on. If you're coming up on a 20-year roof, either shop your insurance now or leave it where it's at until you get a new roof, number one. Number two, I have a carrier that recently, it looks like they took a rate decrease. What they did is they made their minimum deductible for wind and hail 2,500 instead of 1,000. So obviously the rate decreased with the increased deductible, but you're basically, you save $150 per year with a $1,500 deductible increase. That's a 10-year break even point. So you have to be basically wind and hail claim free for 10 years to have a break even on that increased deductible. It looks like a rate decrease and that your rate's going down, but really your deductible increased by $1,500. And so those are things to be aware of, is, hey, when I'm buying this policy, what's my deductible? And do I have that money squirreled away in the event of an emergency? In making sure that the deductibles are where you want them. There's places, Colorado, Texas, Florida, they are doing percentage deductibles and even commercial policies. Jimmy, I'm sure you're familiar with this. Where whatever your dwelling coverage is, let's say it's 450,000, you might get a 1% or 2% deductible, where your deductible on wind and hail is $4,500 or $9,000. And so basically your insurance carrier is basically saying, hey, you're going to pay for half or three-quarters of this roof in the event that wind blows your roof off.
If I could add on to that, there, a lot of things I speak with my clients, the commercial ones and, previous personal ones, is that, if the house is in great shape and there's not really a lot, if it's a newer house or if it's in great shape and you're trying to lower your cost, you may want to think, if your bottom line can handle it, you may want to think about having a higher deductible. That's going to lower your premium right there, especially if you don't have claims. You haven't had any claims in the last 5, 6 years. Why give that money to the insurance company? You're just trading dollars for dollars. Have that, if you, like I said, if your profit and loss statement can handle it, then, have a higher deductible, and that's going to bring your premium down a little bit. And every year, if you don't have a claim, put if your deductibles, $2,000, put $500 away every year, put it in a money market account and let that accrue some interest. And then when you get up to the deductible amount, you're ready to go for that. That's what I've been recommended.
Yeah, and I love what Diane said in the chat. She goes, I tell them when they sign the contract to get homeowners insurance quotes. She goes, because I used to work for Nationwide, so I get it. Like that's
Yeah.
yeah. And for
Feel the
us,
pain.
yeah. So for us in southwestern Pennsylvania, and it's crazy because I've coached loan officers and realtors throughout the country since probably 2017. Our tax system in southwestern Pennsylvania is the most archaic. So when people are like, I want to do a 30-day close, we know it's going to take 28 days to get the tax certifications in. Just because the tax collectors in southwestern Pennsylvania only work on like the third Thursday of the month when it's a full moon, right? So it's we can have everything done in 11 days, but like the tax certs aren't coming in till day 28, like 2 days before. So we have
Hmm.
somebody now a week out of closing. They're like, "Can I get my final numbers?" And we're like, "We don't even have the tax certs yet to give you the final numbers. We're working off the tax numbers that were listed on the MLS." Right. So, and then homeowners insurance is the other culprit, like that burns us at the last second. And Zach, to your point, we end up calling you guys and going, can you please stuff 10 pounds in a 3 pound bag, please? You
I
know what I mean? And you're like, yeah, no problem, Jeff. Yeah,
so
you
I
got
had
it.
that yesterday. A client
We
reached
got a
out
ton
to
of
me.
bags over here.
Yeah, yeah.
I had a client reach out to me yesterday and said, I need homeowners quotes and it needs to be less than 1,100 per year. I don't know if you're buying a 6,500 square foot home. I don't know if you're buying a 900 square foot home. Is it a townhome? They didn't provide me any information until,
Right.
and told me where they need their policy to be. And I'm like, well, you know, part of me as an agent, right, is I have a duty to protect and take care of my clients. And so when you sometimes by giving me a DTI that we need to get the deal done, it puts me in a box and it takes me outside my fiduciary duty. Because like
Right.
Max said, insurance carriers have stripped coverage, and you have to add it back via endorsements that cost extra money. And so if I want to sell you bare bones coverage, right, the cheapest insurance is going to be the most expensive in the event of a claim because you're not going to have the coverage that you need. So if sometimes you're getting me to a DTI number, um, I'm providing bare bones coverage that basically only covers you in the event of, fire, lightning, your basic perils at that point. And so I'm not doing my duty to you as a client, providing with adequate coverage in 2025 going into 2026, because, we were thrown, trying to fit a circular peg into a square hole. And I'm only given so much to work with without being able to actually properly protect clients.
Right. Right. Any questions from
One,
anybody in the room? Yeah, go ahead.
so one thing I wanted to touch on before we got out of this, but the property is obviously the focal point. We can see it, we can touch it, you can feel it. I see this house, I know how old it is. Everybody knows about insuring a home. When I talked about like kind of where the rates were going, one thing to consider, and the gentleman earlier that was talking about all his policies and having the umbrellas and stuff, one of the places to keep an eye on and pay attention to that gets overlooked is the casualty side of property and casualty. So, like in the last 5 years, we live in a very litigious country where people are, suing for a paper cut. So making sure that your liability limits are adequate, making sure that you have proper umbrella coverage and all of your policies that you own are underneath that umbrella. When you go and buy that next house for the LLC or under your personal name, did you double check that the agent stuffed that under the umbrella that you have? Um, just look, I did end up finding that article. Social inflation, the median lawsuit last year when it hits a jury trial was $5 million.
Wow.
So the average umbrella is $1 million. The average homeowners, I mean, in our world, I'd say the average homeowner's liability is 300, 500,000 with a $1 million umbrella on top if you're, properly insured. So the median lawsuit was taking home $5 million when it hits a jury trial, and that's up 23% year over year. So we're getting into an increasingly expensive litigation space in our country. So having your liability in check is really important. That's the stuff that you can't see, feel, touch, so that's important too.
So
If I
just
could
to
add,
touch,
oh, go ahead.
I was going to say, just to touch on that. So, for example, your homeowners is going to come with a personal liability, and it's going to kind of follow you if you're at a golf course and shank a ball into somebody's windshield. But also, just probably the most famous example of this is Johnny Depp sued Amber Heard for defamation. She put a claim in through her homeowner's insurance, and her personal liability is who paid for her lawyer to defend her in that case. And so it's kind of it's going to protect you and follow you. For example, I was driving down Browns Hill Road in Squirrel Hill one day. There was a car accident, and Edgar Snyder was there handing out business cards
Wow.
at the scene of the accident, right? And so there's a big thing for personal injury and people suing, like Zach said, and Jimmy was going to chime in on. Actually having proper limits. My agency, I won't sell less than 500,000 limits as an agency standard. It's just, and that's barely enough today.
And Ryan, one of the questions in the chat from Bonnie says, what would you recommend for liability coverage on a single family home used as a rental?
$1 million.
Okay.
Not
And what's that
only-
look like? What's that? And I know it's different for everybody. What's a ballpark on $1 million umbrella policy, like premium?
So your a rental policy, a landlord dwelling DP3 is going to have included liability on it. Some carriers offer general liability, some offer it as premises liability. The reason I recommend $1 million is not only are you responsible for anything that happens to your tenant, you're also responsible for anything that happens to any of their guests. And you can vet a tenant as well as you want, but it's a different person, right? Homeowners tend to take better maintenance, keep care of themselves, keep everything in order. Tenants don't care as much. Well, it's not my property. I don't care. And so there's a little more risk with a tenant and all of their guests. I recommend $1 million minimum for landlord dwelling policies.
And the chime on that piece, make sure your tenant has renter's insurance. Do not be a landlord that waves the white flag. Well, I've never done it in the past. Do it today. Make sure your lease agreement says that your tenant has a renter's policy. It's like $14 a month. I mean, I get into so many arguments with landlords and even tenants about getting renter's insurance. If you can afford Netflix, you can afford renter's insurance. Renter's insurance is going to at least have 300 to 500,000 in liability. That if your tenant does something stupid, that your property's protected, you're protected. The biggest claim that I went through for my last agency is we had a tenant put a fork in her microwave and catch the top of a building on fire down in Oakland, and it caused $700,000 in damage. But she had 500,000 on her liability with Progressive and paid $13 a month for that Progressive renter's policy, and it paid towards some of the damages caused by her lighting her microwave on fire. So, do not have tenants that don't have renter's insurance.
Jimmy,
I agree with.
Go ahead, Jimmy. I'm sorry.
Yeah, I agree with that. Yeah, what you're saying there, Zach. Even the renter's insurance, having them, even if it's possible with some carriers, they even have them add you as an additional insured on their policy. So their policy's first place and yours is in second place. Going back to the deductible or the umbrella and stuff like that, sometimes, like Zach was saying, sometimes $1 million umbrella is just not enough. If somebody slips and falls, hits their head on the concrete, and Susie's suing you for $1.7 million, and you only have $1 million umbrella. Now you're self-insuring for that additional, if you only have $100,000 limits, and you're going to have to come out of pocket for that, or they're going to sue you or try to take your house or attach your wages. So you got to make sure that you're properly covered on that stuff. And I agree with Ryan here about the especially obviously it has a lot to do with your credit profile as well too. Is like Jeff, sometimes somebody can have $1 million limit over here, but it may cost this other person twice as much that it cost that person. Just depends on their claim loss, all that type of stuff. But yeah, having the higher limits is what you want to do. And so I agree with these guys.
Jimmy, I'm glad you touched on that. And so from the commercial standpoint, most commercial property policies require all of your commercial tenants, and if it's a mixed use, they require renter's insurance of some sort. I'm starting to see personal lines carriers like on 1 to 4 unit landlord dwellings. I'm starting to see those carriers actually implement requirements for the tenants to carry renters insurance as well as liability exclusions if they don't carry it. And then Jimmy, as well as that, and I think it's great that we touch on this. So a lot of insurance policies, factors that we don't really talk about as insurance agents is going to be your credit score, your insurance history, and your insurance score. So everybody, you have your credit score, right? And you're going to get your mortgage with that. Realtors and loan officers are going to see that. It actually affects your insurance rates as well. And then you have an insurance score and insurance history. Have you ever had any cancels for non-pay? Things of that. What are your prior limits on auto insurance? They build like your own, it's like a credit score, excuse me, for insurance. And the better that score looks, the lower your rate is going to be, right? Insurance is based off risk. And if you're a risky client, you're going to be charged more for it.
And Ryan, to your point, like next month on the Grow Zone, we're having a credit restoration specialist on here. So in 2007, I became a certified credit consultant because half the people that call us don't qualify just based on their credit score. And I never want to say no. Like I want to say not right now, but here's your game plan. So I've been coaching people on their credit since then. And back then I learned insurance rates matter based on your credit score as well. And so, yeah, for us, it's always like, it's not no, but let's coach you up and get there. And we're going to get deep into it. Even when I became a certified credit consultant, at that point, I went from making 100 grand a year as a computer programmer to like $18,000 a year, 100% commission as a loan officer. And my credit went from perfect to garbage. And then when I went beyond paycheck to paycheck, I'm like, how do I get my credit score from like 480 to better? Because I had 17 derogatory accounts at that point. And so once I started paying my bills, I could have claimed bankruptcy, but I didn't. And what I did was I challenged all 17 items. I got 15 deleted like they never existed, right? But I paid them all off. They were all paid off, but I got them deleted off my credit report. Those things could have stayed for 7 years and kept my credit scores low, hammering me on interest rates on cars, hammering me on interest rates on homes, hammering me on my insurance rates. And I used to go speak at a high school to the class of seniors about in their 30s when they buy a house, what's the impact of buying a home? Like, what does that do for you? But I also walk through what does good credit versus bad credit do? And the average person, the average person spends more than $250,000 more if they have lower credit than good credit, right?
Oh,
So like
yeah.
it's so important to have good credit in so many aspects of your life, and that's what we're going to do. Any questions from anybody in the room? I know we're past time, but I just wanted to make sure everything was covered here. Everybody got their questions answered. Anybody have anything? And then for the realtors that are still on here, 2026 is going to be a great year. I know I'm a guy that plays with a positive mental attitude, but I'm not saying that just because that's where my head is and my heart is, but the numbers aren't lying. So rates have stayed below 6.625 for the past 18 weeks. Inventory slowly coming back. And then here's the other part. A lot of people feel trapped in their current house with their lower interest rate that they have. And they don't want to let go of that rate, but they have to move for one reason or another. Once these rates hit with a 5 handle, and they're really close to doing it right now, once you see 5.875, 5.75, there's going to be a lot of people that let go of that rate and want to move. So there's going to be inventory coming on the market, and it's going to be great for all of us. So my thing is like be spring loaded and be ready to dominate 2026 because it's coming. It's here. 2026 is the volume is going to be more than we've seen since 2020, 2021.
Also, Zach and Jimmy, I put my contact information in the
Yeah.
chat. I think you guys should put yours in there as well. That way people can reach out to us however they see fit if they have any questions. And so I always tell people, me personally, even if you're not a client of mine or not a realtor I'm currently working with, call me with any questions. I'm happy to kind of guide and point in the right direction.
Yep. And I'll send out all your information with the replay as well. Good deal, guys. Have a great day. Thank you for spending time with us this morning. Hopefully it's going to help everybody here, help their clients. And Zach, Ryan, and Jimmy, thank you for hopping on here for your expertise and your professionalism and helping everybody on the call here.